Welcome this evening once again to The Link. And this week, we also bring you information you can use. Thank you for always joining us as we bring you opportunities and information you can use. Tonight, we're discussing moneylenders and banks, basically borrowing, but between these two entities. And my guest tonight is Mr. Daniel Babonerere, who is a regular panelist here now from Banner Consult and has more than 20 years of experience in the banking sector. Daniel, welcome.
Thank you, Sam.
Yeah, welcome. I will say welcome again.
Thank you.
All right.
And good evening, viewers.
Okay. Ugandans are cash crunched. In other words, cash is not being seen. And now issues of people borrowing from different entities are arising. Tonight we're discussing two issues. What is the difference between banks and money lenders? Because they all lend money. So what's the difference?
Thank you, Sam. And I think I should not complicate it into tires and this regulation game. I would just speak in the common man's language.
Yeah.
Because not everyone is a banker, not everyone is conversant with what tires represent. But I would say the bank is in tier 1 and the money lenders are in tier 4.
Okay.
But there are 4 tiers or 4 levels. But for our own common understanding and for purposes of this discussion, banks are an institution which take money from depositors,
okay,
and lend it to other people who have a lot more of what to do than the money they have. They have more ideas than the money. So they are borrowing and on lending.
Okay.
In short, they are borrowing from us, the public, which deposits.
Okay.
And they are heavily regulated by Bank of Uganda. They can issue checks and they can go to the clearing house. Money lenders, on the other hand, are more lend their own money.
Okay.
So Bank of Uganda does not have to get so worried about them losing their money. Instead, they are now regulated by UMRA, which comes in mostly to see an orderly market and also to protect the borrowers. At the commercial banks, the Bank of Uganda is looking at protecting the depositors,
yeah,
and the borrowers as well.
Yes.
And stability of the market, since they are big institutions.
Okay.
Yes.
So the money lenders, yes, Umura just focuses on me, who goes to borrow.
Yes.
All right.
Yes.
If there are banks which are more regulated,
yeah,
than money lenders, why do people still end up running to these people and having a lot of problems?
The question actually could answer itself by the very word regulation. Many of us in Uganda love informal things, love a bit of not being regulated. You see how we drive on our roads. We don't like being regulated in most cases. But it's also to go a bit in history.
Yeah.
Money lending or money lenders were termed as Shylocks.
Okay.
Mostly that term was coined by Shakespeare in that The Merchant of Venice. But in the history of Britain and the church, even the church doctrine still does not allow lending money. Even commercial banks shouldn't be lending money at interest. Actually, Islamic banking still doesn't condone lending money at interest, whether it's low or high.
Okay.
It's called usury. Yes.
Okay.
So, but in the Middle Ages, the king's treasury or the exchequer was short of money, and they had to look for a way around that the Christian doctrine and see how they can lend money. So that role was actually pushed or outsourced to the Jews, who were not subscribing to the Christian doctrine.
Yeah.
And I think that's why Jews still dominate banking. So it was a job shunned. Even commercial banks were shunned, but that's how capitalism went around the regulation you are talking about.
Yeah.
So even in Uganda, the regulation alone imposes a lot of processes and verifications. A financial institution that is regulated must go through also as well to protect. Some of the regulations are put there to protect the borrower,
yeah,
and the depositor. But the Ugandan way we want to make a decision, we have got a deal, we want to go there and
Chap,
then.
chap.
And we are not going to wait for this banker looking for this risk or the other risk.
Sign here, sign too much there. So, you know, so.
Yes, so the money lender sometimes is a necessary evil.
So, one reason why they go there is because it is chap chap.
That's number one. But the other part is on the macro scale, the money supply. There isn't enough money to go around, even in those very institutions.
Hey.
If the money was, so for example, if we had lots of other banks giving up friendly loans, you would not, the banks would innovate and look for ways of complying with the regulation and as well serving the client as fast as the money lender, if not faster. But we have seen it coming along, that online lending. You apply, maybe you get an instant loan, or it comes later, because credit scoring is now automatic. But we are still a long way to go from like big financing.
Okay.
Yes.
Okay, so if a money lender is charging me 25% and the bank is charging me 15%, surely, why would I go to a more expensive person? I'm still wondering about the math.
You are actually putting it very shyly and lightly.
Yes.
The 25% of the money lender is not annual. It's monthly. But we still go for it.
Yeah, so yeah, I'm puzzled at the math. Can't I see the math?
Sorry?
Can't I see the math? I mean...
No, I mean, if I'm roofing my house and it's about to rain and the banker is telling me to come next month, I definitely have to go to the money lender. Because if I lose that 1 million, it's okay, I can lose it.
Yeah.
But I will save the house, what I have already constructed. Yes.
So the money lender is not likely to ask for your house like the bank might ask for your house.
If my truck has broken down on the road and I need money to get it off, the bank will not respond that fast.
No.
Maybe it could, but we have probably not reached that level, or probably we're not as good clients as that.
Okay.
Yes.
But the money lender is going to say, hey, give me your fridge.
The money lender is a smart person,
Yes.
and is not encumbered by the regulations. So you can make a decision. By the way, they also lose money.
Yeah.
They also lose money. Yes, but they don't cry so much. So, but we know them when they are making us cry. Yes.
Okay.
Yes.
Now, okay, I must go to money lender. Now I'm stuck, I'm in a fix, the bank won't give me money, money lender will give me money. How do I avoid being entrapped by the situation of a money lender like we have seen in other situations?
Yeah, it's the same stuff as we have been discussing. Know exactly why you want that money.
Okay.
And the money lender, you should take them as bridge finance.
Okay.
Short-term borrowing, which must get you from point A to point B. But if it becomes the habit of borrowing from there, was you are borrowing from a money lender to finance long-term, then you are definitely going to have problems. Because there are very few businesses that will earn you that money of 10%. I think the lowest are charging about 10% in the market. Per month, not per annum.
Which is 100%, 120%.
So actually, when you take a loan at 15%, in 6 months it has doubled the amount. But most of us don't calculate in percentages. We just 15%, 1 million, it's 100,000. But if you keep that money 6 months, it has doubled, and then you are wondering how this money is ripping you off.
Okay, so that's one. Avoid, get the money for the right purpose.
And always try to have near liquid assets, which you can always liquidate in such very fast.
What do you mean by liquid and liquidate?
Near liquid, if I have my treasury bills, I can go there and liquidate that treasury bill. If I have
get the money back.
A fixed deposit, I can go there and actually liquidate and use it. But in many cases, you might actually not even have the time to go to liquidate your near. But the biggest one is to understand the game you are going into. It's a short term. It's very high interest rate. So I can actually, if I'm on they have asked me, it's at 9 p.m. and I must have a medical operation or die, I really cannot think twice. If there is a money lender, I will take money.
But normally, that's not
interest
why
rate.
people borrow money from money lenders.
Yeah, it's normally emergencies. But there are others who have been blacklisted by the formal system.
Okay.
So you can actually, at some point, pity the money lenders. They are actually fishing in troubled waters.
Okay.
The guys who have been all chased by the other systems have congregated here. So when you hear some of them crying, don't think it's only the money lenders who are bad. But the guys who go there and the expectation they have there, these are people who live on the rack. They think you'll get money, very fast you get a deal. Now, when you get it and it goes wrong and you lose that money, it's very hard to recover from it other than losing the property.
Is that why the money lenders are therefore ruthless, because of what they are dealing with?
I'm not so sure they are ruthless, but they are very street smart because they very well know the market they are operating in, and they very well know probably what you fear most and what you love most. So they use that to put you in a no-win situation. Yes, you must either pay or lose. So they either win or they don't lose.
So in a nutshell, if I must go to a money lender, yeah, how do I remain a winner?
Borrow money you can afford to lose.
Yes.
Have plan B or even C. Because you're not going to a money lender and then say, I'm going to explain to him. The money lender also lends to people they know very well.
Yes.
And not creditworthy in most cases. But there are also good money lenders who are lending people even without collateral. So it's a dual thing. I know someone who lends money even when you don't have a collateral, no check, no nothing.
But they know you.
But good character. You remember we talked about character.
Yes.
They know you, they lend to you, and those people are never in the news.
Okay.
But we know about what's in the news, and what makes news is normally the bad news.
Okay.
Yes.
Thank you very much, Daniel, for the, painting us a picture. Viewers, if you go to a money lender, they are still in the financial system, and they are still in the credit system. So still take it seriously. It's not a joke. It's not an emergency that's going to go after the emergency. The problem of paying back is going to still be there. So the culture of borrowing to pay back must also be sustained in the case of money lenders. This was part of our continuous series on what your banker will not tell you, but a former banker, Dan, is telling us what they will not tell you. We hope we added value to you, and we thank Standard Chartered Bank for sponsoring this show. That was the link. Thank you for joining us tonight.